the market structure. The market structure, guys, plays a very important role in in price action, basically. But it is something that is not paid attention to. Okay. So the market structure is actually the foundation of this whole strategy. The market structure followed by order blocks. Okay. But your success in this trading system that I'm going to be showing you will be based on how good your eyes are in spotting the market structure. So it's all about working. It's all about practice, and yeah. So let us get on with it. So I want you guys to understand something before getting in further, right? So if price is moving, let us just say price is moving. Let us just say price. Sorry about that. Let us just say price is actually moving in a series of higher highs and higher lows. I mean, of lower lows and lower highs. Something like this. Okay. Right. So you have to understand that this is a bearish trend. Most of you guys know that, right? So the major rule here is when you are drawing your trend line, right? Let us say you want to take your trade here, right? Price has to be moving in lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. It has to be a trending market, right? And if and when it's a trending market, it has to form this beautiful, nice bearish trend. So now when you want to sell here, right, you want to draw your trend line starting from here, right, to there, right? You want to sell here. What you then have to understand is your first touch has to be on the last second lower high, right? So you can see that this is your first touch, second touch, and this is your third touch where you want to sell. Okay, so I do not expect you to put your trend line here or maybe here on that high right there. Your first touch has to be on the last on the previous three lower highs. I don't really know if I'm making sense here, right? And it has to be moving perfectly. It has to be moving perfectly. It has to be moving perfectly. And so I don't expect you, that is like one of the first things that you need to note. I don't expect you to then put your first touch there when you have a lower high here, right? It has to be 1 2 3, right? So now that is why I said at the beginning that it is very important for you to know how to spot the market structure, because if you do not know how to spot it, you may actually miss this high right here and then maybe put your first touch there, right? Let us say you never really spotted that high and then you put your first touch there. That will now become incorrect. Okay, so let me try and show you using the previous trades that I've just taken. I'm actually on two trades. Both signals were sent in the VIP. AUD NZD was sent yesterday. AUD NZD was sent yesterday, and GBP USD was sent on Monday. This is a weekly time frame trade, but I'm just going to start with the weekly time frame trade, right? Remember I said right now we are just talking about the market structure. It's purely the market structure. We haven't talked about order blocks and how you use them and stuff like that. Okay, so now I want you to actually note this. Let me just go over to my to my so you can see that price is actually moving in lower lows and lower highs. If you are not disciplined enough here, you will not be if you are not skilled enough, you will not be able to spot the right lower lows and the right lower highs, right? So you need to practice this until you master it. So there is your high there, right? That's not my Another thing you have to note, these that you see here, this is another trend inside this huge trend. So that is why I'm saying to you that it can get a little bit confusing, but you need to practice. Okay, so here, that is your high, that is your lower low, that is your lower high, that is your lower low. And where I sold here, it was my lower high, and I'm expecting price to come and beat that low there. So I have a risk to reward ratio of about 1:2 on this trade. But let us then try and draw our support and resistance. Okay, let's just try and draw a support from that high. So this, you really need to grab this with both of your hands. The reason why you can see that this is not a lower high, guys, this is not a lower high, but the reason why I actually put my resistance here was because if I would have sort of like put it there, you can see now that it's a complete mess. It's totally not really making sense. But I then put it here. Why? Because that small high never really beat that lower low there, so it is not a lower high there, so in instances like this, you then have to compromise and put your second touch there. Yes, that is a lower high, but sometimes you just have to see that price didn't really. The market cannot be super perfect at all times, right? But what you just have to try and do, you have to master the way that it actually moves. Okay, so once price reached here, guys, I then entered using my weekly time frame on Monday because I had our candlestick pattern. Here is our candlestick pattern, right? If you are a new student, you might not be familiar with it, but if you've been with me, you know our candlestick pattern. It is something like this. The body of the bearish candle has to close below the previous bullish candle, but I'm not there yet. I will get on to that. Right now I just wanted us to look at the market structure. Okay, so going on to AUD and ZD, let us get on to AUD and ZD. Okay, okay. AUD and ZD, as you can see, it is strongly going to the downward. It's a 1:3, close to us. I can say it's a 1:4 risk to reward ratio. It's a very beautiful trade. Yeah. So I'm trying to actually cut this in likely portions, but I can see that it's going to require me to also involve some few things so that you can grab it at a faster rate, right? So I use you use the trend lines, ne? And then you use your Fibonacci retracement tool, and then you use your order blocks, and then you have your candlestick pattern to confirm your entry. Okay, right. So here, let us just look at this. Here we have what? As you can see, we have this high there. That is why I said you must be skilled, otherwise you won't see anything, right? Here we have this high. Here we have this lower high. Here we have this, we have this lower low. Here we have this lower high. And then here we have this lower low. There is not a lower low and lower high. Why? Because you can see, I, I, I don't know if I can be making sense, guys, but you can see the distance price took to get here. You can see the distance price took to get there. It just doesn't make any sense, right? And the reason why you will then say this is going to be your lower your lower high, it's because you can see the distance price took to get there, and then the distance price took to actually get there. It actually makes sense. So that's your high, that's your lower low, that's your lower high, that's your lower low. And then now you do what? Remember I said your trend line has to follow the previous lower highs, and then you throw your what? And then you throw your support and your resistance, guys. Okay, you then throw your support and your resistance. Okay, I took this trade on my 1 hour time frame, right? So let us look at what I talk about when I talk about the Fibonacci retracement tool. Okay, when I speak about the Fibonacci retracement tool, what you need to know is we actually have these zones here, right? Right, price has to be at least, you don't even consider the 0.382. Price has to at least be at your 0.5 or 0.618 or 0.786. That is where your price has to be. So we said you actually have your trend lines, you have your Fibonacci retracement tool, and then you have your candlestick pattern here on your 1 hour time frame, and then you have your order block on your 4 hour time frame. Price is actually on your order block on your 4 hour time frame. There is your order block. Makes sense, doesn't it? Right. So I just sort of like told you what this is all about, but I was hoping to actually cut this into small pieces to actually cater for those that have no idea of what is actually happening here. But I hope they will find they will find the way as I actually proceed, right? Right. So let us look at other set types. So now that I've actually mentioned the order blocks and stuff like that, but I don't really want to talk about that right now. So you need to be patient. So I won't really talk about that right now. So yeah, let us continue talking about the market structure. Okay, I'm just talking about the market structure right now. So I will then explain how you enter, and I will then explain the candlestick patterns and all of those things, right? So let us look at this at this nicely at this nice bearish trend. Excuse me for a minute, let me get something to drink. Right, sorry about that, guys. um so here we have this nice bearish trend, right? These are the kinds of trends that you must familiarize yourself with. Okay, cool. So if we can look at this market, guys, we have, it's so much important for you to really know how the market moves, right? We have this high here, we have this lower low here, we have this lower high there, we have this lower low there, we have this lower high there, we have this lower low there, we have this lower high there, lower low, lower high, lower low, lower high, lower low. And right now it seems like that's your lower high, and right now price seems like it wants to go down further, right? Simple stuff, you just need to understand price action. So here is our setup. This is my 4 hour time frame, right? We had a setup here because we had our candlestick pattern. Okay, this is our candlestick pattern. All right, there is a PDF on the drive. You can, before you even start, you can literally just look at the candlestick pattern. But yeah, why did we enter here, right? We look at the previous two highs, right? We look at the previous two lower highs. That is where our trend line has to be coming from, right? It doesn't come there, but it has to come from the previous two lower highs, the two touches, right? And then your third touch has to come from your next lower high, right? We can see that. Okay, this is pure price action, guys. This is pure price action. So, and then now what you would want to do, but what you would want to do, you can now draw your Fibonacci retracement tool, and then you can see that price. When you throw your Fibonacci retracement tool, what you have to understand is your Fibonacci retracement tool has to be at the previous high, guys. Your Fibonacci that mustn't be at your, but your Fibonacci retracement tool has to be on your second touch, and then you look at your third touch where your Fibonacci retracement tool is at. And in this case, our Fibonacci retracement tool was actually reversing from 0.618. Okay, I hope that is making sense. Okay, that is, I hope that is making sense. But it's just that I don't want to confuse you guys with that right now. I really wanted us to look at the market structure. Okay, excuse me. So let us look at this now. Let us just simply look at this trend right here. Okay, right, we have that low there, we have that high there, we've got this low there, we've got that high there, we've got this low there, We have that high there, right? This right here is what you need to be aware of. This is a trend within this big trend. You mustn't pay no mind to it, right? Okay, so let us continue looking at it. Let us continue looking at it. Okay, so let us say you were to take your trade here. You look at the previous two lower highs for your first and second touch, and you can see that there is your high there. There is your lower low there. There is your lower high there. There is your lower low. And when you want to enter there, and then when you want to enter there, you actually draw your trend line here, right? Your first and second touch have to be on the previous two lower highs, and then you draw your Fibonacci retracement tool on your previous high, on your second high, right? And then you can see that it was seated to at your 0.618. 0.618. That is what you need to actually take note of. I said you start taking your entries from the from your 0.5, 0.618, and 0.786. Okay, so let us quickly proceed. Let us just look at these things. Here you can see that we have this low right here, and we have that high right there. We have this low right there, right? You can see that what you see here is now a small trend, right? And you can actually trade this small trend using your smaller time frame. Okay, let me explain it to you this way. You see, when you want to take your entries on your 1 hour time frame, right, you have to have an order block that is from your 4-hour time frame, right? Same applies when you want to take your entries from your 4-hour time frame. You have to have an order block that is on the daily time frame. Same counts when you want to take your entry from the daily time frame. You have to have an order block that is on the weekly time frame. Same as when you want to take your entry on the weekly time frame. You have to have your order block that is on the monthly time frame. That is why here on GBP USD, that is why here on GBP USD I took my entries on the weekly time frame. Why did I take my entry on the weekly time frame? Because price was on my monthly monthly order block. There is my order block right there, and then price came to retest this order block, and then I had my candlestick pattern on my weekly time frame. Even here on AUD NZD, right, I had my even here on AUD NZD, I had my order block on on my 4-hour time frame. As you can see, that is my 4-hour time frame, right? And then my entries were taken where on my 4-hour time frame when the pattern actually formed. Okay, so I hope that is making sense, but we will cover that. So let us continue looking at the market structure, because there is something that is super important for you to actually note. Okay, right, so let us proceed. Let us proceed. And then where do you take your profits? We will cover that, but just a quick thing. You take your profits here at this low, because you know for a fact that price has to make a new lower low, and you do not take less than 1:2 risk to reward ratio, right? So if you see that price is going to give you a less than 1:2 risk to reward ratio at this low, what you can do is you can take your trade, and then once price actually creates a new low, you can then protect your profits and then let the price run. As you can see, that is exactly what I did with GBP, USD. I actually I actually was taking I'm actually taking a 1:2 risk to I'm actually take it's a 1:2 risk to reward ratio trade, as you can see, right? So you can see that price is not going to give me my 1:2 risk to reward ratio at this low here, right? But what I will do is once price actually reaches this low, I will then protect my profits and then let it run till it gives me that 1:2 risk to reward ratio. I hope that makes sense. Okay, let us look at other. As you can see that price is not doing anything here. Price is not doing anything here, so you don't want to get caught up on anything here, right? And you can see that price is actually doing something here, right? This is not going to be your high, because this is not going to be your high, because you can see that price then created a new lower low where here, right? So that is your low, right? So you can see that that one was actually damaged, right? And yeah, let's proceed. Like, you need to know how to draw these things, guys. Let us say you were wanting to take your trade, maybe here you thought price was going to reverse. Maybe let's say we have our candlestick pattern maybe here, and price is at our Fibonacci and price is on our order block. Your second touches has to come from the previous, your two higher lows, right? And then here you have to get your what, and then here you have to get your candlestick confirmation pattern, and then price has to be on your order block, and then on your Fibonacci you can see that price is on your zero, would be somewhere around your 0.618 zone. So those would be the rules that you would use, right? So let us proceed. You can see that lower high, we have our nice trending market here. We have our nice trending market there, and then when price beats that low there, when price beats this low there, this whole trend is now damaged, right? And then price started doing what? And then price started forming this new trend now. Okay, high there, that's your low, so high. So in a trend like this, you need to be you need to be skilled, right? You need to be skilled in order for you to actually understand what's going on, right? Because you would be super confused. Okay, you have your low there, you have your high there, you have your low there. So let us say you were to take your entry maybe somewhere here. Let us see. Let us first see which order block price is actually seated in. And yes, price is actually seated on the weekly time frame order block. There it is, meaning you must expect to take your entries on your daily time frame. You must expect to see your pattern here, and you didn't get your pattern here, so you wouldn't trade. But if you get your pattern on your weekly time frame, you can then enter, but it would depend on the risk to reward ratio. So if you don't get your pattern on that specified time frame, let us say you were trading using your order block. Let us say your order block is on the 4 hour time frame, and then your entries are on the 1 hour time frame. If you happen to not get your candlestick pattern on your 1 hour time frame, and you get it on your 4 hour time frame where your order block actually formed, you can take that trade, but only if it is going to give you a good risk to reward ratio. Okay, so you don't want it to be something that's going to give you less returns. So you need to take note of that, guys, right? So let us proceed. Okay, and here we have AUD CAD. It is a trade that I was actually looking to take. Why am I saying that? It is a trade that I was looking to take next week Monday, when the new week starts. Let me explain to you why I'm actually saying that. It is because I can see here that we have this low, right? We have this low, we have that lower low, we have that lower high, we have that, and now price is giving us another low. So your touches on your previous what? Touches have to be on your previous what? Right. And it looks like it didn't touch there, but if it touched, what would have happened is I would have went over to see where the order block is actually seated on, and as you can see, my order block is not made from the weekly time frame, because we have that breaker there, making my weekly time frame invalid. So we go over to our monthly and see, and yes, we can see that price is actually on my order block on my monthly time frame on this bullish candle. That is why I would have used my weekly time frame to actually enter. And then when this week price, when price would have closed below here, giving me, when price would have closed maybe somewhere here, giving me my candlestick pattern, then that would have validated my entry, guys. Okay, and earlier on I was looking at this trade. As you can see, we have our candlestick pattern here, and then on our daily time frame you can see that price is on our on our order block on our daily time frame, meaning our candlestick pattern has to be on our 4-hour time frame, and it was on our 4-hour time frame. But the problem here is, let me just point it out to you. You can see that we have that high there, we have this low there, we have that high there, we have this low there, we have that high there, right? So your second touches has to come from the previous higher low. So there was my thing, there was my second touch. You can see that price broke it. You see, price literally broke it, and I'm not really happy on this kind of break. Like, if it actually broke just a tiny bit and then came back with the candlestick confirmation pattern, then I would have taken the trade. And you can see that on my Fibonacci retracement tool, price is at my 0.618, right? But I'm not really happy about it. So yeah, I'm not going to execute this trade. You need to be disciplined. So yeah, so I think when it comes to the market structures for today, for now, for this part, I think that is all. And then we will continue looking at it as we do Zoom meetings. And for new students, I think they will most definitely find recordings in this drive. So yeah, let's go over to the second part.